Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Hope you all had a great weekend. Pick your poison as far as why the market is down this morning. We could say it's a COVID variant. We could say it's geopolitical tensions. We could say it's just a normal, healthy pullback. Whatever's on your bingo card, just cross that off because it's all up for grabs this morning. Market is down pretty much across the board. There's probably a couple of stocks here and there that are higher. But it's just one of those mornings, folks. A lot of red on the screen. We'll talk about that. We got some news. It is a bit of a merger Monday. We got some Zoom is doing a deal. The Slack Salesforce deal got the okay over the weekend. And the one SPAC that I bought is not doing a deal. Thank you very much for that, Bill Ackman. We'll talk about that. A couple earnings today. We got 14 earnings reporting tonight, 6 reports this morning. That the flow will get very heavy Tuesday, Wednesday, and especially Thursday of this week. So a lot to get to on the earnings front. Our guests today, two of them, Tim Quast will join us at 8:35, and Matt Hammond will preview the week in IPOs at 9 o'clock. Joel, Dennis, good morning. Joel, how are we doing in those charts?
S&Ps are down 45 and a quarter at 42.73 and a quarter. Crude's going the same way. That's down 289 at 68.69. Gold back under 1,800, down 1680 at 1798.20. Silver down 58 cents at 25.22. Bitcoin down $800 at 31,125. And Ethereum's going the same way. That's down $58.50 at 1855.75.
Just one of those mornings. Everything you just said is down.
Well, I go to my up filter here.
Yeah.
And I have 1,000 stocks running that filter. I see a couple that have ticked green, but nothing. This is actually what's bid green. So I have a filter, not just what's trading green, but was actually bid up. Because sometimes you'll have just, an odd lot, or not an odd lot, but something just trades there. Maybe it's not even a real print. Maybe it's an over-the-counter print. But what is bid up this morning? And there is not a heck of a lot. Sirius XM Holdings is bid up 1 penny.
Oh,
ooh, that's exciting.
It is.
There's a bunch of bond ETFs bid up. But otherwise, there's really nothing. There's not even really anything at all out of the major S&P 500 companies. Not a lot bid up. Even giving this example, AutoNation. Let's go to an earnings report here right now because reporting on the way wrong day. Chose the wrong morning to blow it away. Tractor Supply chose the wrong morning to blow it away because we don't care about blowing it away last quarter. We care about what's going on next quarter. Even if you're raising guidance, we're not even sure we believe it, this market. So give us TSCO AN reports. We're doing them together. They're both down despite awesome reports.
AutoNation, their EPS estimate was $2.58, and their actual was $4.83. So they beat the estimate by over $2.
Yeah.
Sales also blew it away, just about $7 billion versus a $6 billion estimate. So very nice beats for AutoNation. They also announced a $1 billion buyback. And Tractor Supply, like you said, they beat on the EPS, beat on their sales, and they raised their EPS guidance for the year. And their sales guidance as well. So a beat and guidance raise for Tractor Supply and a huge beat plus a buyback for AN. Doesn't matter this morning.
Doesn't matter. I had a funny feeling they were going to beat. I actually held it long into the report. I don't do that often. And then I was looking at the futures. I was like, I'm going to have to sell this on any type of a pop because this is just the stock. They're not going to rally anything. So it actually did pop up and was up for a little bit on the report. And I did sell my stock out, so I can freely talk about it now. But it's tough, man. I think the stock would have been up substantially. If we were at an up day this morning, if, the markets were even flat, I think AutoNation would have been up significantly more. But because you're down, they're just taking, they're just selling everything. Like when we're struggling to find a stock that's up, I mean, obviously you can say, the takeover stock, FIVN, is up, but I mean, that's what it basically takes today to go green a takeover. So I don't know, both companies, kicking ass and taking names in the quarter, really, and the guidance great out of Tractor Supply too. Doesn't matter. Wrong day. They're selling stocks today.
Yeah, AutoNation's down 70 cents at 101.90. It's had a nice run. There's a couple lows in the same area that you might want to keep an eye on to see if that acts as resistance or support.
Do you want to what
about Tractor Supply?
Yeah, what's with TSCO?
We already did the earnings. So we're looking
down
5. Joel,
wow.
You okay?
Yeah, that's down
You sound tired
480.
today.
That's down 480 at 184.20.
How was your weekend, Joel? You sound tired to me.
Excellent.
You sound tired.
There's some support perhaps at 180 in Tractor Supply. I see 3 lows around 180.
All right, moving on. I'm going to run the show here. It looks like we got a reverse split today. Look at that. Yeah. AHT. We talk about almost always they never seem to open up as much as they're supposed to. We warned about this last week. So if you're taking it long, thinking the reverse split was going to be your savior, we were warning that was probably likely not to be the case. A lot of times they just don't open up enough for the reverse splits. And here it is. Same story. Stock. The adjusted close is $18.20. It's trading at $16.32. So it is down 10% more from Friday. So, I mean, if you're looking and you're saying, hey, there's my HT, $16. Everybody was saying in social media it was going to hit $10. Well, it did. It hit 16. Unfortunately, they took away 90% of your shares to do it. I mean, the problem with all these social media stocks and the problem with just following random people that are giving you your ideas on social media is that a lot of these little penny stocks are junk. A lot of this stuff is absolute junk. It gets hot, and the AHT story got hot, but for the most part, a lot of these companies, and we've talked about this before, if they're attacking stocks with high short interest, there's a reason for the high short interest. It's probably because these companies are not doing very well. So now if you're looking at your portfolio and you're full of all these meme stocks and full of all these high social media stock interest stocks, high short interest stocks, and you're way down, that's because, you know what? These companies and these stocks just weren't very good to begin with. Do they get hot again? Do they give you an out? Maybe they do. But on any type of rip on any of these stocks, I'd sell them all. That's just my opinion. AHT, I don't know much. I don't follow the company that much. But when the CEO comes out and thinks a reverse split is going to help the stock, that's enough to know that I maybe don't want to invest in that company.
Was that the day it went from 40 to 30?
From $4 to $3, yeah.
Yeah.
Pre-split, yeah. And his idea was, and he was actually with the tweets, was saying, well, they wanted to try to get the stock price back up over $5 because then it becomes marginable. But to do that, or in a lot of accounts, because a lot of brokers' accounts don't allow you to margin the stocks below $5. So if we get it back over, then everybody will come buy it. Well, now it's $1.60 post-split if you go back to the adjusted basis. So
wow.
If it goes back to 5, it'd have to get to 50 to get back to where, that $5 where it really was, or $4, I guess, is when they announced it. It's tough. These are tough. I mean, it's one thing to invest on a hot story. It's one thing to invest, on something that's got a lot of growth. It's quite another thing to throw your money and invest in companies that are really struggling and not growing at all. And I think people are learning a hard lesson here. And you know what? You make money in the long run by learning lessons, but learn from it. Pick better companies, pick better stocks in the future.
You know what's interesting about this one is that, you had the rally and the reopening stocks and the hotels. Did some of the hotels come back and make new all-time highs? And this thing just did absolutely nothing. Maybe had a little pop last year.
Well, I had the May and June as everybody on social media was pumping this thing.
Right. But just resting at the lows of the pre-market session. 1632 is your last print. It's down to $1.88, and pre-market low 1615. But I doubt anyone has any interest in trading this one.
Well, since Joel mentioned the reopening stocks, I mean, that's aside from oil, that's probably your leader down this morning. Right?
Every day. Not just today.
True.
It's been the trade for the last month. The great reopening has turned into the great non-reopening trade. and where everybody is piling in the airlines and the cruise lines. And you know what? I was a believer in the reopening trade too, but once they start breaking trend, tell something's up. The only one I'm stuck with is now Las Vegas Sands. I guess I should have sold them all, but I got to tell you, like it's tough to just, we were in American Airlines, even U.S. Steel for a bit, trading these things because they had good momentum going. Most of the trends are completely broken. I mean, look at the banks. The banks kill it on the earnings. They announced buybacks. They announced increased dividends. They can't stop going down. It's TLT. Can't stop going up. Banks can't stop going down. That's the correlation. You got to know if you're trading bank stocks. It's there again. It's a simple game when you identify the relationships to a certain extent, because TLT up, banks go down, and they're not done buying the bonds. I don't know who. I don't know why they want to, throw it like in the TLT. You want to throw your money in a 20-year for 1.43%? Give her. I won't put I'd rather have it in cash. So right now, I'm sitting with just a lot of cash because there's just so many unknowns. But you know what? Once we start stabilizing, I'm ready to strike. I'm not like calling this the big bear market. We're going to crash down 20-30% from here because we're going into another lockdown. I don't think that's the case. I think we're just in the spooked period. I do think we're going to get some type of a reopening trade eventually. I do think some of these stocks are going to be buys, but not trying to catch the falling knife. I keep getting people tweeting at me and saying, are you buying American Airlines today? Well, it's making new lows on the move, so no, I am not. But am I going to buy it when it stabilizes and starts to perk up again? Maybe, but right now these charts are all broken. So I'm going to let the, whatever damage happens and not be a part of it and then come in. And that's the way that, if you're just a long only trade, I mean, if you're short, or if you go both ways, sometimes you can make some money shorting these stocks too, but it's a tough game. We're not speaking to most of the shorts out there because 90% of retail investors are never shorting a stock. So I think the safe play, if you're a retail person, is to just have some cash right now. And don't think you have to buy the dip on the first day. It's not usually usually you always get a second chance. Wait for a level, wait for something. There's really no signal here that the selling is over. It's a nice down day. Do we bounce today? We seem to bounce every time we get a big down day. So am I selling all my stocks when we're down, 50 points on the S&P? Hell no. But, I mean, you got to be on the rallies. I think you got to be lightening up because we just don't know how long this damage is going to be. But if you got a lot of cash and you're sitting on half cash, maybe just ride it out. And then when you start to see the stocks, stabilize, not as a day trade, but you get like a day or two, like Joel Elconin method of trading, get a low from the previous day, and then you're up here. Then let's see if that old low holds, and we'll try to lean on that. That's the best way I've found for swing trading, is leaning on those lows. It takes it out, get the hell out. If it holds, okay, well, let's try to ride this a bit.
Perhaps looking when you get to these kind of extended declines or these kind of momentums, it's usually better to go to your longer term charts. And then try and see if you can have the daily lows line up with something on the monthlies. But we talked about Delta Airlines a while back that had, looking at the bottom right chart here, this is a monthly chart. You had 4 months in a row where it just hung out at the same area. And I believe, where was that? That was at $43 for the month of March of April, May, and then you pierced it in June. Took it out. I mean, as plain as day. Not on a day. I mean, dailies you can get, your little 2-day rallies here and stuff. But as far as monthly support goes, this one, it's coming up on it. 37.42 was your low for the year. That was in February, and then in January you had a 37.74 low. So that's what you're looking at on the monthly. So another buck away. I don't know if we'll see that today in Delta Airlines, but that seems to be what the monthly charts are indicating. And the S&Ps just can't catch a break here. We did have a little 10-point rally, and we just continue to make new lows on the session. Down 1.22%. Where would 5% put us? Where do we close?
Going down 5% today.
No, I mean, why not?
I don't think we're crashing today, Joel. Maybe you're right.
How do you know?
Maybe got a feel in here. I don't think it's getting that ugly. I think the buy the dip mentality will come back in once again. But we're 5%.
216 handles
216. Joel's calling for an epic
would
collapse.
be no. I'm just looking.
It'd be a great call if it happened, but
it's down. I mean or they do it from the close. If they do it from the close, it's a little bit lower than that. But yeah, you'll get some rallies in there.
Somewhere around 409 on the SPY, right? Maybe.
Let's see where that's
Yeah,
at.
somewhere around that.
let's just honestly though, this market has just been so overbought. Everything is expensive. Like I keep getting that question. We keep talking about on the show. We're like, in the last month we've been like Groundhog Day around here. I was like, where? Everybody's like, what stocks are you buying? I'm like, I'm not buying anything. It's all nuts. Everything got silly. The reopening trade has got cheaper here now, and some stocks have got significantly cheaper. But when you look at where stocks are trading, even Apple, and I'm talking against my buck here, but I mean, it's not cheap. It wasn't cheap, and gets up there and fails right at 150.
Yeah.
So put a double top in the boot. So actually almost a triple top in the boot. Not good technical sign there, and this is your leader. So it's not great. There's some technical damage done here, and being done in individual stocks. I mean, the IWM is a completely different story. I mean, the IWM is at 210. We were at 230, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading sessions ago. So you're talking about a 7% fall in 10 trading sessions for the IWM. That's significant. So SPY has been holding up, we know, because of Apple and FANG, and that's pretty much it. Everything else, the broader market has been selling off for weeks. So it's kind of just continuation of the trend we've already been in. But it seems like the S&Ps always find another way to come back. Never seems to sell off at more than a couple of percent. It will eventually. We're going to have a type of, Joel Elconin correction eventually where we get 5, 10, 15, 20% pullback. And, we haven't had that in a long time. Really since the COVID crisis started when we fell 30% in a month. But I think the biggest pullback we've had since that March of 2020, somebody was saying, was 7% on the S&P. So we haven't had a significant pullback here. Traders in the last year and a half haven't experienced a bear market. Well, here you go. It's not a bear market, but it is in certain stocks. So, and some stocks are ugly. And there's, obviously crypto is down 50% or more, depending on which crypto holding you have. But you just look around, like everything's expensive. So there's just not a lot that's even on a relative basis cheap, unless you're looking at some of these, like AutoNation. It's cheap, but it doesn't even matter. So it's trying to hold on to green. It just went green, but it's a tough market to just say, oh yeah, I'm just going to keep piling in on all these stocks because you know what, a lot of them aren't that cheap anyways.
We're in July here, right? Near the end of July. How many back-to-back down weeks do you think we've had?
Not a lot, I bet you.
I would guess the most would be 2 at any point. At any point in the last year, I would say 2.
I don't know about the last year, but I was just looking at the S&P, and I was looking at the weekly, and this is what you had. Put this out over the weekend.
Jeez.
The index is only back-to-back weeks in the red twice, here and here, and it was a buy the dip.
It's always been a buy the dip.
Buy the dip. So here's your first week. Here's your second week. I guess it depends how far we'll fall this week before you buy the dip. But I think that's pretty amazing. The
mentality is hard to break. It wins. The buy the dip mentality continues to win. And that's why, people are saying, they're buying puts. And I haven't actually placed a lot of bearish bets here. I'm just sitting back. I'm buying dips and selling rips and day trading. But I'm not putting any swing trade longs. I tried silver for a swing trade long because I thought maybe it'd play defense. I got stopped out of that because silver broke down on Friday. And as soon as I saw that red candle, I actually stopped myself out a little bit earlier because I was gonna get out at the 23.75. But it was such an ugly candle starting on Friday. I was like, it's taking it out. So I cut out of it a little bit early than I needed to. But I would have been stopped out this morning. So I don't know if I have really any swing trade longs on. I'd have to go just look. Like I had some stuff that I was like designated kind of trade, but more investment. But like I said, even the ones that I was like, I might hold on to some of my AMD, I sold that too. So I don't know if we rip and rally and and start blasting off from here, I'm going to be left in the dust because I'm sitting with a lot of cash.
I guess I can get rid of this retail buying frenzy pushing silver over $30. Remember that?
Yeah.
When
Reddit was starting to talk about it.
That was for a day or two.
Reddit's not moving stocks. Like it's not. The social media trade is really hurting. And we were talking about that just with the AHT, but I mean, you just go through them all, and AMC critical level. Hey, apes, $32 needs to hold this. It's going to test it. You got the shot for double bottom there, 32.89. It's holding 32.14. But you start taking out that 32.14, I think you're going to be through 30 in a hurry. So you want that level to hold. GME's trying to hold up. It tried to rally there, and you know that the rally it's holding up fairly well. GME is still holding up fairly well. But then you go to these smaller ones like Wish. Everybody's wishing they weren't in that thing right now. I tell you that, because that thing's approaching the new lows. $8.86. There's just a ton of those meme stocks and social media stocks that have just been absolute junk for the last month. I don't know what turns around because it's so crowded. They're so crowded on the long side. All this short squeeze. I keep hearing and seeing, oh, short squeeze, let's squeeze the shorts. Those are the most crowded longs right now. Are they not?
That's interesting.
Are they not the most crowded longs? Because you have everybody that doesn't, know what the hell they're doing. They're just randomly following people on Twitter saying, oh, this one has a high short interest, I'm going to buy this stock. Like that AHT, it's probably a very crowded retail long.
What's interesting
Still?
is the crowded retail trade. That was always a thing, but for 3 months it stopped being a thing, right? Because typically you look at like a quote unquote crowded trade on the long side, and you say, oh, this is a sell signal, and that usually worked.
Yeah.
But for January, February, March, April, May, that didn't work. That
was winning.
Right.
The crowded trades kept getting more crowded and kept going up more and more. Yeah.
Right. So
great point.
So now it's reverted back to what I would say is maybe a more normal behavior. What's going to be really interesting is if the market maintains this weakness later on in the week and next week too, because we're going to get a lot of really good earnings numbers. Expectations are high, and the numbers will probably be good. And basically, all the big companies report in the next 2 weeks, this week and next week. And if the market is this week, is as weak as it is today, going forward the next week and a half, how will that? I mean, it'll make for some very interesting trading action in the big names. So that'll be something to watch for.
We have even this week. We got Tuesday Netflix, Chipotle.
I know.
Wednesday's Verizon, Coke, Johnson & Johnson. So a little bit of and this consumer staples trade too.
Yeah.
Has been hot actually. We should talk about a couple of these stocks that have really been moving. But we look at them all. I mean, Procter & Gamble breaking out and making highs, and then you had Kimberly-Clark breaking out and making highs, and Clorox breaking out and making highs. I've got a couple trades on those ones. I'm actually short Procter & Gamble, long Clorox, full disclosure, but those are just short-term trades. You don't make more of a hedge trade.
You think these trades are as crowded as like the pot trade? When Tilray got to 300, or
the consumer staples trade's a bit crowded right now. Yeah.
What about?
But not a pot. I mean, people are. So you're seeing the consumer staples come down a little bit. It's a sell everything type of day, but you always seem to be separation. But they're not crowded like the pot trade. They're not crowded like that. I mean, what about this pot trade? Let's go talk those stocks, because those have been assassinated. I mean, Tilray here, $30 back in March. It's $13.19 here this morning and trying to make a new low on the move. So, I mean, not a new 52-week low, because obviously we were significantly lower in 2020. But a new low on the move it's trying to make. And you just look across all of these pot names, same thing. CGC is under $20. It's $19.10. I mean, I've talked about valuations being nuts on these things for a long time. Valuation, your CFA hat is working again. Logic is working again. They're selling, and they are looking a little bit of fundamentals to a certain extent. But, I mean, CGC in February, we got to $56 again. Holy Joel. That was right near the all-time highs from 2018. What a gift. What a gift. And I mean, if you're a stock, and this is a good lesson too, we try to always teach on this show, but if you got a stock and it's been in the gutter and it starts taking off and blasting off, going up 100% in a week, that's when the peanuts, like Harlan Pine says, sell your peanuts when the circus is in town, because you hold on long enough, the circus leaves town, and all you're left with is shells. And that's what you're left with a lot of these pot stocks. Are they cheap here now? Not on a valuation metric, not at all. So I don't know when the CGC pain trade stops. I don't know when the Tilray pain trade stops, because you know what? From a fundamental valuation perspective, they're still not cheap. So they could be a hell of a lot lower and still not be cheap. But I mean, right now they're cheaper than they were. Does the story get hot? The only thing that can keep these stocks up is really story. So you need that pot story, legalization. You need that all to get hot again. And if that doesn't get hot again, you're left with valuation, and valuation still nosebleed on a lot of these stocks.
And what about just going along the crowded trade line? How about, the cryptocurrency trade?
Oh, that was just the Saturday Night Live topping event, which we called on this show for 3 days before it. Every single day. I even started a handle SNL topping event, for crypto. So that's how convicted I was with that. Obviously, I did hold a little bit of Bitcoin and I held a little bit of Ethereum, but it's been horrible. I mean, the crypto has been a mess. And think about it, though. Like, so many of these cryptocurrencies, it's just nothingness. At least when you're buying AMC, at least you're getting a company.
Movie theater, right?
At least you're getting something.
Yeah,
you're getting some cash flow. I mean, even if it's negative cash flow, at least you're getting a company. I mean, when you're buying these things that are made up, like the Dogecoin, which was made up as a joke, you're really buying just digits on a computer screen. Like here, I'll tell you what a lot of this cryptocurrency stuff is right now. I'll go like this. Well, I'm going to write a number here on this piece of paper. I'm going to write.
Don't give us
10101010. There's a bunch of numbers there. Do you want to pay $1,000 for that right now, or $2,000 or $5,000? Because that's what you're doing when you're buying these cryptocurrencies. It's a bunch of junk.
Wait a minute. Is that the passcode to your wallet? Your digital wallet?
No, I'm doing the zeros and the ones.
I know what you're doing.
And I'm just saying, a lot of these cryptocurrencies, there's like 10 million of them out there. Most of them are not even worth this piece of paper because you know what? At least with fiat currency, you can wipe your ass with it. You can't do this with a lot of the other cryptocurrencies. They're absolutely junk. Now, I have some Ethereum. There is some utility and some value in some of these things, but a lot of these that you're just randomly buying and hoping it's the next big one because there's 10 million of them, a lot of them are going to be worthless.
How much was that paper worth? I'm just curious. What's that paper worth?
A lot
less now because it comes from.
It's worth nothing now. It went in the recycle bin.
It comes from lumber. It's worth a lot less than it was a few months ago.
Well, that's true too.
It's just
that was a good one. That was a good one, Triple D. That one.
I'm just saying. People call. What do you think of this cryptocurrency or this? They tweet me at this. I don't know any of those things. I have a little bit of Ethereum, a little bit of Bitcoin. There's probably a few other ones that are going to be good, but it's like trying to find a needle in a haystack. There's going to be a few of these that do make new highs and catch on, and the stories get hot. But story has driven crypto for a long time, and you know what? That story is ice cold. Bitcoin probably still best of breed. Ethereum's right there because there is some utility, there is some functionality. I still like the Ethereum. I still have a little piece of it in the long-term portfolio. But Come Rocket they've got, and Dogecoin and all this other. Now this stuff's made up as a joke, and people are putting real money into it and then losing on it. They're like, what happened?
Yeah, well, can we have some perspective on the Bitcoin on this? Because it was 30,000 in late January. So we're basically back to where we were at the start of the year. And also, if I had told both of you guys, let's say a year and a half ago or whatever, hey, Bitcoin's going to be at 30 grand, you would lose your minds.
I'm not talking about Bitcoin, though, either, Spencer.
All right.
I have some Bitcoin. I have some Ethereum. I think I just made that very clear.
You're talking about
that there is some, the Bitcoin story, I believe, is still going to be there. Is it, if it loses a story and people decide that they don't want it, it is just literally digits on a computer screen. So there's nothing to fall back like cash flow and fundamental analysis. But I'm talking about how many cryptocurrencies are there? Like, how many are there? Is there a way to even count it?
Yeah, there's thousands of them.
Tens of thousands.
I don't know how many there are.
There's like 99% of these things are probably going to end up being worthless. So,
well, yeah,
I think the Bitcoin's got a good shot to actually be worth something. I think the Ethereum's got a good shot to actually be worth something someday. Other than that, I don't know much about going further than that. Maybe some people have.
I think there's 57.
Cardano. They've talked about
5,700 according to CoinMarketCap.
Okay, but there's probably a whole bunch of 5,700. That seems light.
How many did you say?
5,700. 5,700.
5,700?
Yeah,
that's probably just what's on that site too. There's probably other ones that are being made up all the time.
Maybe.
I didn't think there was that many. Holy!
I thought there was more. I said tens of thousands.
Way more than that. So
I thought it was light.
Anyway, okay.
So
I
just
guess
be
that doesn't
careful. You
mean-
got to do some fundamental analysis and some homework, and just can't say, well, that's hot, everybody's talking about it, I'm going to put my money into it. Whatever that was working in January, February, March, like Spencer was saying, follow the leader was working. You could call that whole, trade follow the leader. This stock's hot. This story's hot. I'm going to put my money in that. That was working. That's not working anymore. Typically in the markets, it doesn't work. So you were in a very abnormal market where you had, a company that everybody's talking about, crowded trade, get more crowded. Those crowded trades have come off substantially. But is this the start of something, let's give it perspective. The S&Ps are holding up very well. We just had, rotation into real companies like Apple and Amazon and, companies that aren't nosebleed valuation, but they're definitely not cheap at these prices. But you had a lot of rotation in that stuff. But all of a sudden that starts getting crowded too. So right now it's just like the only trade that seems not that crowded is cash. And that's what people are piling into today.
I mean, this S&P made a new high on Wednesday, right? So same with
Can you believe it? Yeah.
So
Yep. I mean, we're still way up there. Look at Coinbase hasn't done real well either. If
you know what? That may be the topping event was the Coinbase IPO. That and I know it's too soon to tell whether or not like Coinbase, like the correlation between Coinbase and crypto, because Coinbase is an exchange, so theoretically shouldn't volatility be good for an exchange? But I don't know. Regardless, they're both going the same direction and they're both going down. So that may have been the topping event.
I'm taking some heat for my crypto ramp. Shizzy, love you, Shizzy. He's actually a funny guy on Twitter there. He says, stay in your lane and don't talk about all the crypto you don't know nothing about. And I agree. I'm just saying most of them, there is definitely some projects out there and that are going to be worth some money. So not every single one is going to be worth money or worth nothing. But I think 90% of them are eventually going to be worth nothing. If you've done your homework and you can find the 10% or the 2% or the 1%, the Amazon of the internet bubble, if you can find the Amazon of the internet bubble, you're going to make some money. I don't know. I'm not that good, so I'm just going with the two leaders, Bitcoin and Ethereum. I have a little piece. Obviously, if I thought every single crypto was crap, I would sell my Bitcoin and Ethereum as well. So I obviously think there's some money there.
Most people understand that not every cryptocurrency is going to the moon. I think.
Well, no, I don't think they don't. Do you understand? I think people think that if they have a diversified crypto portfolio, they're going to make a lot of money. I think if you have a diversified crypto, I always talk about diversification. I think if you have a diversified crypto portfolio and have like 1,000 of these things, I think you're going to lose a lot of money. Because I think there's only going to be one or two or a couple dozen that actually become worth something.
We don't know. We're going to debate this all day, but
because how was the internet? So we could have said, yeah, diversification is king. But how did that work for you back in the year 2000 in the internet bubble? You had Amazon in that portfolio, but you had 99 other pieces of crap. So pets.coms times 100. So, I mean, that's the trouble when you're in an industry that is so early and crypto still is so early. When you just say, oh, I'm just going to buy them all and I know I'm going to make some money, I think that's actually the recipe to lose money. I think you really have to do due diligence. So, Shizzy, it's a good point, buddy. Not trying to hate on every single cryptocurrency. I'm just saying that there's going to be a lot of them. If they're made up as a joke, they're probably going to remain a joke.
All right, let's move on from that. There's a few things we didn't get to. Tim will be on with us in a second here. We didn't even talk about Zoom. We didn't talk about Pershing Square, Tontine. I don't know where you want to start with those two, but those are actually your two stories of the day, your news stories of the day, besides the overall market. Is Zoom is buying Five9, ticker FIVN. Nice premium, $200.28 per share is the takeover price.
All stock, right?
All stock deal, yes.
Give me that ratio. Risk arb traders, listen up. Spencer's going to give you the ratio.
200. Well, yeah. So the deal represents that $200 is what the price represents, but the actual ratio is Five9 shareholders will get 0.5533. 0.55.
Write it down on my risk arb sheet. Write it down. 0.5533.
0.5533 shares of Zoom for every share of FIVN that you own.
There you go.
FIVN?
Yeah, so yeah, Five9. So for every buck that Zoom moves, FIVN is going to move 55 cents. Once, you get after the first day or two of shenanigans where everything adjusts, then you get that, so it's basically almost 2 to 1.
Kind of, yeah. So
a little rounding error.
14.7 billion deal. Big deal for Zoom. Yeah, I think RNG is actually trading higher. No, it will. Never mind. I take that back. Nothing is trading higher this morning, but I thought RNG was. I saw earlier. I thought it was trading higher on this as a sympathy thing, but
No, it's down $11.
I guess not.
Good move for the company, I think.
Yeah, probably.
But
Using stock. Like use your stock to buy other companies. Use that high price, that high stock price to buy in other stuff. I like that. I like that too. Is there a place? I mean, okay, so and we're gonna get Tim when Tim's ready. We'll bring him on.
Yeah.
But is there a place for the stay-at-home trade here? If we're really worried about the reopening, is there a place for the Zoom in your portfolio? Is there a place for the Peloton? It's not a place for me. I'm just saying I don't own any of these stocks and still nosebleed valuations. But is there a trade here potentially that maybe the stay-at-home trade gets hot again? Because there hasn't been a lot of love, even a Teladoc. There hasn't been a lot of love. I tried to play that from the long side. I'm stopped out on that one too. Is there a trade here, Mr. Elconin, for the stay-at-home stock?
Oh boy, I don't know. Things never really seem to repeat themselves. Like with the shutdown and everything, I think if we do get to that point, I think people are just going to be much more reluctant to do that. So there may be in some of these, but I think you're probably better off shorting the reopening stocks than trying to, buy the lockdown stocks.
Okay. All right. It is
if you believe that trade is on.
Yeah.
Right.
It's Monday morning, which means it's time for Market Structure Mondays. Tim Quast is the founder and CEO of Market Structure. Dennis doing his dance. Tim, good morning.
Good morning, Spencer, Dennis, Joel. Good to see you guys.
Props to Tim, who called us last 2 times on the show. He's saying, look under the hood, look in that market structure, and you can see that this market looks weak. Tim, absolutely right. That's what we are in here now. We need you to look under the hood once again and tell us if it's going to get weaker or if we're going to rebound here. What are you seeing?
Well, I'm reminded of a humorous line from W.C. Fields, and of course there'll be a bunch of folks on this show who are way too young. So I think I'm too young to know who W.C. Fields is. But if you don't know, millennials, Google W.C. Fields. So
as we are right now, hold on, I don't know who that is.
As we think about the work from home trade, Spencer and Joel and Dennis, you guys were talking about this, and the state of the market, it calls to mind a line from W.C. Fields who said that I spent half my money on gambling, alcohol, and wild women, and the other half I wasted. Meaning, I'm just kidding. It's just a funny line about what do you do in a market like the one that we have now. But we did, you're right, and I appreciate that, Dennis, that we talked about this last week for you folks who are regular to Market Structure Monday. And we were talking about, at first, the banks, which kick off earnings. And we looked at Goldman Sachs and Morgan Stanley, and we looked at the data, and we said, well, the data tell us not to expect very much, that they probably won't do well. It doesn't matter how good the earnings were, and both Goldman Sachs and JP Morgan, I think I said Morgan Stanley, JP Morgan did very well. The whole group did very well, but the stocks were weak. And we looked at broad market sentiment, supply and demand. The way that I think about the stock market is supply and demand. And it doesn't matter what the talking heads are discussing or what the Federal Reserve is doing or what the government does or what the political situation is or macroeconomics. If the supply-demand equation in the market doesn't match that rhetoric, then we will have trouble. It is no different than any other market. I saw Mike Jackson on CNBC earlier today. Great guy. I have a lot of respect for him, CEO of AutoNation. He's about to retire from that position, and he's always a straight shooting fella. He doesn't engage in hyperbole. He just tells you how things are. And he talked about, it was the 5th best quarter in company history for AutoNation, but he talked about the supply chain challenges. And one of the things that I hope Market Structure Monday does for traders is that it prompts folks to think about how there's a supply chain in the stock market too. There isn't just magically stuff to buy and sell. And we don't tend to think about that. We show up every week in the stock market and just suppose that somehow there's going to be the correct balance of supply and demand in whatever we're buying or selling, and it will move in our favor. Well, a lot of the time it doesn't, right? So it's just important to understand that. And I'm going to share my desktop because I'll answer this with a look at broad market sentiment, which is what we were talking about last time. So traders, if you want to follow along, go to marketstructureedge.com, and you can request a free trial. You can just put your name and email in, and you can follow along. We say that one of the 5 essential ingredients of good trading, it's easy step number 5 to us, is manage overall risk. You got to have a way to think about what the broad market is doing. Let me get rid of my face. I think you can see there. Okay, so I'm in the July 19 portfolio. But over here, there's broad market sentiment. This is our risk management tool. And we want to buy rising sentiment because we want to buy rising demand, and we want to sell falling demand generally, because that will generally mean, as a central tendency, that you're going to capture the gains. So this is broad market sentiment, and it's comprised of the 500 stocks making up the S&P 500 and the composite data for them. The SPX is a futures contract. People realize that. There's no underlying supply and demand that determines the value of SPX. It is implied demand in futures contracts. So we like to look at the underlying stocks because that's a better read. So if I expand this out a year, and this is again what we were talking about last time, that this dark part of the graph here, this is broad market sentiment, and it should wax and wane. Supply and demand come and go. And it's compared to SPY, which is a proxy, an exchange traded fund, oldest and largest, and it's a representative of the S&P 500. So generally speaking, when demand is rising above this 6.0 red line and then retreating and rising and falling, that's the waxing and waning of supply and demand that you would expect from people's fear and greed and indexes rebalancing and new money coming into the market and so on. When that trend begins to weaken, and look at the trend, right into about the first quarter, this was not bad. But ever since then, the the demand side of the equation has been weakening. And this has preceded every market correction. Look, I'm not saying there's going to be one. I could make a case that with sentiment nearing a bottom here as we with new options trading today. We want to talk about that briefly too, that there could be a surge. The old options expired on Friday, triple witching. There were index options that expired Thursday. Overall demand for derivatives declined about 1% last week. Well, it should be up. If people are renewing their contracts, we should see an increase in demand for derivatives that people use to take or manage risk. Well, they decline. Well, that then sets us up for a decline today with new options trading. It's like you show up at a farmer's market with all of your stuff to sell, and there are fewer people buying than what you planned for. Well, things will go on sale. And so then the Dow futures are down 500 points. But it may not be a good indication of overall trends or expectations for the economy or expectations for earnings. It is very contextual. It is about new options trading today and whether supply and demand are equal. Well, they're not. Look at this is where right now broad market sentiment is at 4.9, right there. If I move my cursor, it's going to move. But for July 16, Friday, it's 4.9. What is the nexus of supply and demand? 5. All right. So there is more supply than demand as we start the new week with earnings kicking off. About 300 companies report results this week, 1,000 next week. But don't think that this is necessarily telling us about that. It's telling us about supply and demand.
So we have everybody and a lot of people in the chat, and not everybody, but the majority of people probably looking at this and saying, down 500, what can I buy? That's that natural mentality of, and it's worked. I mean, it's worked well for a long time.
Right.
What do you tell them? You tell them to wait until you get above this 5 number. Yeah, you can be ready to strike, but you're not seeing the signal yet to come in here this morning and buy this initial dip here.
Right. I tell users of Edge, we send a daily market desk note, and I tell them they're basically, look, I want to make my returns in as little time as possible because time is risk. Time means things that I don't know and don't expect. So I don't like the 5 days around monthly options expiration. So that tends to be, tends to be Wednesday, Thursday, Friday, where there are VIX expirations, index options expirations, and then either triple or quad witching. And then the following Monday, that's today. Monday is new options trading. Tomorrow is what we call Counterparty Tuesday. All the banks like Goldman Sachs, Citi, Morgan Stanley, and JP Morgan are behind about 96% of almost, call it $700 trillion of notional value in swaps and various derivatives contracts. So they're going to true up their books. They're not concerned about making markets in equities at those times. So that then causes me, as a participant who understands these things, to say, well, maybe I don't want to get stepped on by that. Maybe I'll just avoid that. So this particular month, this is an off cycle month where options expiring Wednesday are VIX expirations. So it went Thursday, Friday, Monday, Tuesday. Wednesday are VIX expirations. Thursday, we're clear of all of that. I don't like to trade in that. I have one position right now, and it's in real estate. And the reason I'm in real estate is because if I look at the overall supply-demand balance, and it'll take just a little bit for the machine to catch up here. So if I go look at the real estate sector, that's the only thing that looks good to me right now. If I look at real estate, it has rising demand and fairly stable supply in short volume. That's how we think of it. Demand, sentiment is demand. Short volume is supply. The only thing right now that I would look at retailers. I mean, no wonder they're down today. The demand is horrible and supply is just on an upward arc. Well, I'm not going to buy retailers, right? So I want to buy things where I have the highest probability of the proper supply-demand balance. Now, to answer your question about, well, what would I tell people to buy? Well, mind you, we're only data suppliers, but I look at what we call a liquid up portfolio. That's what I've got on the screen here. It's a dynamic portfolio that I give it instruction to go tell me all the stuff out there that has rising sentiment, constrained short volume, and at least $10,000 per trade of liquidity. I like liquid stocks because I'm less likely to get caught out in a meme stock sort of situation. Well, there are 6 companies in it. Under normal circumstances, it could be 100 stocks in that portfolio that are offering me opportunities.
What are those 6?
Let's go look at them, right? So, what are the 6 things to look at?
Tesla and Citigroup.
Actually, Tesla looks pretty good. Yeah, Boston Beer, KLA Corp. That's a semiconductor company.
Well, I can see the Boston Beer because we all drink more when we're depressed about our portfolio going down.
Right, it's a WC Fields strategy. He said during Prohibition there were several days where he had nothing to eat or drink but food and water. So that's another great WC Fields line. But there you go. That out of the entire market, notice that all of these have less than 50% short volume. The trend is up, and they're all below 5. Now, that doesn't mean that they're guaranteed returns, but the highest probability, there's your 6. That's it. That's all there is. And out of 3,400, there are about 2,600 companies in the Wilshire 5,000. All right. So out of all of those right now, that's it. Well, that tells us by itself, that tells us the market isn't great right now. And I prefer to wait for a great market. And the
how's
data.
Citigroup in there, Tim? I'm just wondering how Citigroup's in there because it's making a new 52-week low here today, or actually not 52-week low, but a new low in the last 4 months. So I'm just curious, just to go and get into the the thick of your system here, how you can see Citigroup as potentially looking good.
Right. So here's why. There's one simple reason. The demand arc is up. This is price. So price is this one, and here's
coming in.
Yeah. So even though price is falling, the demand arc is up, and supply is right at trend. That by itself, to me, isn't great. It just says that's why the system says, here you go. Here's an opportunity. Now, if I look at the broader data, look, it's not spending very much time bouncing against the ceiling at 10. It spends a lot of time at or above 5. When it's not at or above 5, which it hasn't been since early June, see right here, about about June 14th, options expirations in June. I'd like to be out ahead of options expirations. It's really not been great since, but that's why, Dennis. It's not. I'm not looking at this and going, "Wow, that's awesome."
Yeah.
See,
but
that
that's
seems like embodiment of the overall market today as well. Well,
Right.
doesn't look great, but compared to everything else, it doesn't look that bad.
Right. It's a Winston Churchill line. It's a democracy is the worst form of government in the world, except for all the others.
Right.
And this is like it's
These are good lines.
it is a good line,
Right.
right? So Citigroup looks, is the worst stock in the market except for all the others right now. So still not the one I would pick. If I were going to pick anything out of this group, I pick JLL because real estate as a sector shows a better balance. Plus, it's only 3% of the market. If tech is 27% of the market and it's weak, well, that's going to take the whole market down. Consumer staples, huge. It's 13% of the market. Consumer discretionary, about 13% of the market. Financials, about 14% of the market. So you look at all of these and you can only find one stock in them. That's not a great market. So my advice to traders right now is let's get through Wednesday, VIX expirations. I warned folks last week I did a couple of presentations. By the way, I'm doing a boot camp for Benzinga Saturday. And we're going to talk about why options expirations is something important to understand as a trader, that you can take advantage of the trends into it and avoid the dangers in it. But if this whole thing looks weak, well, let's just wait. Let's just wait for, if you're sitting out, then you don't lose money. You want to avoid losing money and use data to help you make money. That's the whole point, right? That's what we're trying to do.
All right, Tim Quast is the founder and CEO of Market Structure Edge. Come from the market structure, stay for the random historical quotes that we've never heard before. Tim, always a pleasure. We will talk to you again next week.
Good to see you guys. Have a good one.
Tim.
All right,
Thanks, Tim.
Let's talk about PSTH here. The one SPAC that I dipped my toes in, and I missed this. Apparently, it was out over the weekend. I didn't even see it till this morning. But the SPAC deal with PSTH, this was complicated because they were buying 10% of Universal Music Group, and then they were going to the rest of the SPAC was still going to be out there as a SPAC. Regardless, it's not happening now. It is not.
They pulled the deal.
They pulled the deal. PSTH. I guess there were some shareholders that didn't love it. The exchanges didn't love it because it was a weird pseudo post-merger SPAC, but also still a SPAC thing. So the exchanges didn't love it. Some investors didn't love it. They cited it for the reasoning it also created some problems for people that were that had options or whatever. So regardless, PSTH is back now on the market looking for another company to acquire. They have 18 months to do so, but the deal they had is now off the table.
Well, this is what we talked about then when they announced this deal, and the stock was $23 or $22. I don't think it's good enough for $24. I don't think it's good enough, and it's come back in. I think 20. A lot of the SPACs are priced at 10. I believe this one's a 20, meaning it's $20 is where if they don't do a deal, you get your $20 back. So you naturally would think 20 is going to give you a floor because now we aren't post-deal anymore. We're actually back to pre-deal. So I'm not surprised. It's up 12 cents here. I think you're going to find support in the 20s. I know it got down, and this morning was down at 2010. Wow, that was a gift. Is that this morning? 2010 hit this morning?
Yeah, 4 a.m. If you would.
So that's a gift. That's just because at 20 you're getting your money back on. So I think short-term trading, obviously they do a bad deal, it can go through 20. But when they go to pre-deal, it seems like they like to hold on to the 10, or in this case they'd want to hold on to the 20. It's Bill Ackman. I think in the low 20s. I probably take a shot at it in the low 20s. 2076, 2077. It's not a hell of a lot of risk, in my opinion, at these prices. And if they get a better deal next time. But is there an immediacy to need to get in here? I don't think so either. Is this blasting off to $22 today because all of a sudden, we've rewarded, or they're not doing this deal? I don't think so either. So I think it's kind of just going to hang out for a bit until we find out what the next deal is. And if it's a good deal, maybe the market rewards it. If it's a bad deal, they don't. So we're back to pre-deal. 20 is your support.
And what was the day that they actually announced that? Because I think I remember you talking about the reaction, and it just was.
I feel like it was the gap down day.
Yeah.
If we go back to June 3rd, maybe.
Was that it? I mean,
I think so.
It was. I thought it was. June 3rd. That was the day. Very good.
Yeah, June 3rd. And that's the gap down. So it was 24 and 25. Like, it's not good enough.
24.
And then they knocked her down to 21. So
Then
I think
it
in the after hours that day, it was trading like 26. And I was like, wow, that's just, somebody really excited for, I don't think something to get excited for. And obviously came down substantially after that. So I think I actually tried. I can't remember if I traded this or not. I was trying to trade on the short side that day. I don't remember if I actually got executed or if it was a borrow issue or something. I can't remember. As I make a million trades, I don't remember that
How
one.
many times has that happened? That that someone's like went into a deal and then pulled out of it on the SPAC.
On the SPAC side, that's a good Mitch. Mitch is in the background.
I'm sure they'll talk about it on SPAC Stack. It's happened for sure, but
not a lot, not common. We haven't talked about it.
Not that
good
often.
question. Mitch, Mitch, are you there?
No, he's not. Oh, he is. I don't know if he's here.
You're not listening to us?
I
always listen to us.
He's doing stuff. Someone in chat a while ago asked about NVIDIA. Just the stock split does go into effect.
Big day for it today.
Tomorrow.
It is not running into the split. It is not running up into the split. As a day trade, I'm interested in, this would be one that I actually would be interested in buying the dip on today. But you got to see, the market continues to roll over. Obviously, the market stock is going to continue to roll over with it. But I think if we have a rebound today, this is if scenario. If the market goes to rebound, I think NVIDIA will rebound harder. And I think you do have some people who don't want to be short ahead of the split. Because we know, they tend to open up just the opposite of AHT. The split stocks tend to open up higher the next morning after the split. So I wouldn't be surprised if we actually see a little bit of strength today because it's been straight down for three. We basically lost 100 points in 3 days going into the split. That is not normal.
Yeah, but Dennis, you said this didn't run into the split. I mean, this thing went from like 580 to almost 850.
Yeah, so it's giving back a third of it.
Yeah, 835.
You got a point.
Thank you, Joel.
Yeah, I mean, and then I think someone just said, you know what? I'm not waiting around, and they jammed it. It had, you had the gap down day. So there's even people. I mean, you can buy this one on a dip if you wanted, whatever the scenario is with the split. But holy mackerel, literally, that thing was at 5. And I remember looking at this the other day. The day before they announced the split, it was 584.50. And then it popped that day to 599.67. So, you can buy it on a pullback for the split, whatever the days are effective. But there is still a lot of people sitting on a lot of profits at 7.15. So
I like it here in 7.14. So just for a day trade, this isn't long term, not for a long term account. But and again, you're catching a falling knife, so it's hard. This thing could hit 700 on you, so you almost got to wait until you see what the market's doing. But if that market starts to curl up and you start seeing the buy the dip mentality coming in here, this is one that'll lead the way back, I think, just for today. So I like this as a day trade long.
I got you.
But you got to be careful, and you got to have the market turn around. If we get this Joel Elconin 500-point down day here, it turns into a 1,500, 2,000-point down day. If you're talking the Dow, nothing's going to hold NVIDIA up in that case. But I kind of like it here at 7.14.
We made a pre-market low at 63 1/4. So we bounced 6 points off that, starting to stabilize a little bit, perhaps going into the open. But guys, I'm going to hop off right now. I'm going to go over to PreMarket Prep Plus and cover a lot of tickers we didn't get to cover. So Spencer, I'll see you at 3:30.
All right, Moderna as well. Just have that on your radar. The S&P 500 inclusion is it's reflected on Wednesday.
Okay.
So we've got today and tomorrow for that. Okay. I'm also watching Church CCIV. That SPAC vote is Friday. So watching.
What a disaster this one's been.
CCIV into the SPAC merger vote Friday. That's finally it's finally going to happen or not happen. I don't know.
I say get ready for that retail washout, and then they're going to scoop that thing. Get ready.
Do you think CCIV, they eventually scoop it up?
Yeah, they're just going to wash everybody out that's been long, heavy, and then they'll wash them out and then watch for that scoop. So that's what I'm going to look for in that name.
Well, you're going to undercut a key support level 22, so maybe we get the Gil Morales undercut and rally trick here too. So keep an eye on that too. When is the vote?
Friday.
I got a few days on this one, but
you got a few days. Also watching EA, they have some sort of big event on Thursday. So that's it. It's going to be an earnings.
I wanted to rebuy my EA, and like the gaming stocks. I have Take-Two, I have Zynga. I sold my EA right around here, and I'm like, I kind of want to rebuy it, but I gotta wait. Obviously, this is the type of market where you have your shopping list, and if there's certain stocks like the cybersecurity stocks, they're probably going to get smacked. We're here with the overall market too, but is hacking going away? That's going to be something that's going to continue to happen, and cybersecurity stocks are going to continue to get big mentions here, and you are getting pullbacks here in CrowdStrike starting. Now, I wouldn't strike on CrowdStrike right away because it looks like it's breaking trend, but have your shopping list, and if it gets silly and CrowdStrike got back down to like 220 or something like that, I'd be interested in it there. Or CyberArk, for instance, this is one we've played before too. It gets back down to 125 area, I'd be interested in it there. Even FireEye gets back down to that 18 level, I'd be interested in it there. So have your shopping list.
Yeah, this has been the laggard of the bunch going back years. But anyway,
yeah, it has. But again, it depends on. You're always trying to think like, where's news flow gonna go? Are we going to get another hack, or is hacking done forever?
Probably not.
Exactly. So I think you're going to continue to see hacking get major media, and that means the cybersecurity stocks are going to get major media. So it means that story. We talk about there's investing on valuation, investing on story, and then there's the combo approach. I try to do the combo approach, anticipating there's probably going to be more people talking cybersecurity stocks in the future.
Sure.
Get them on a pullback where maybe valuation isn't just nuts, although on most of them it is nuts. But you find your levels and you think, okay, well, you're getting a pullback here. These stocks aren't going away. Stocks that I'm interested in. So I'd love to put some more cybersecurity stocks back into my long-term portfolio, or even back into my short swing trade portfolio, but at the right levels.
It's going to be it. That's the theme of today. At least is waiting. Maybe that becomes a theme of the week. Who knows?
Maybe not though. Maybe today's the day to strike out, to buy the dip. I mean, if you're sitting with 100% cash, maybe you got to put a little bit to work. I'm not 100% cash. I'm not short the market. People think, I talk bearish, I'm short the market. I'm not short any. I'm hedged a little bit. I have some short stocks portfolio on, but I'm long the market, and I'm typically long the market, because typically, if you're holding shorts long term, I'm going to be short the market thinking we're going down the next decade. That's a tough bet. It just hasn't typically, made money in the long run. So that's why I don't put shorts on my long-term portfolio.
I would never be 100% cash unless I intended to spend that money like in the immediate future. But
yeah, and even when I'm talking cash, so I'm way more than what I would say in cash, because I'm sitting here and I'm building a house, and I've got some other stuff. So I don't even consider that cash, really as cash. I'm looking at like, I can look at my registered money, and I'm sitting with like 40%. And my job in my registered account is to only buy stocks. It's its only job. That's its only place it can go. So when it's 40% cash, it means I'm cautious. I'm very cautious right now. And that's what I would say is I'm not bearish. I'm cautious. And there's a big difference. If you're bearish, you're betting on the short side. I'm not betting on the short side here. I'm just cautious because we have so many unknowns. But I'm ready to strike. I'm like, sitting in the tiger, ready to pounce on the, once we start to curl up and have those opportunities, have your shopping list ready and be ready to strike. Because there is, just like Tim was saying, there's certain times where you just want to be in cash. You want to protect your capital. And there's other times you want to be putting your cash out there. You want to maybe even be on margin, to a certain extent, and, getting money out there because money is being made. This is the time still to be cautious right now. There will be a time, and maybe it's coming sooner than later, to get aggressive. Right now, I'm still playing cautious. So there's going to be some people that make money buying the dip here today. But again, there's a high risk with doing that. I'd rather have a prior day where, okay, we washed out. Now we come back, and now we retest. And now I can lean on that retest low as opposed to just trying to catch the falling knife on day one.
I agree with you, John. Dennis sounds like he's ready to buy the dip. You're ready, Dennis.
I probably am not going to do it today because it's a washout day.
But in general, you're ready.
I'm always ready to buy the dip. Buy the dip and sell the rip. I mean, I wanted the T-shirt. I got the Detroit Lions T-shirt on, which is, I guess, the opposite of buy the dip.
All right, Dennis, thanks a lot. Right. We'll talk to you again tomorrow.
Yeah.
All right. Let's bring on Matt Hammond from IPO Warriors. It is a busy week, I think. I looked at the IPO schedule yesterday. It looked a little bit more crowded this week. Matt, good morning. It's a little bit dark.
So, yeah, I'm calling you from a cave in Paros, Greece. We came on the ferry today.
Wait, you're actually You're actually in a cave right now?
They be like cave hotels.
Oh wait, the famous hotels that we
Not Santorini, the ones you're thinking of, but it's like that. We are not far from Santorini. We just came from Mykonos this morning.
Oh my god.
We're on vacation, so I'm a little bit kind of behind on things. I'm monitoring things, and I'll be showing up doing the newsletters for the next 2 weeks, but not trading so much. My wife needs some attention, and she's down at the beach now while I bring the IPO preview for next week from.
That looks great. Well, let's get to it then. Let's get to it.
Sounds good. So one thing I want to touch on, you guys talked about cybersecurity being a hot play. Sentinel-1, that's one that IPO'd about 2 weeks ago. It's traded pretty sideways, a little bit down from its debut price. It's a nice one to pick up, I think, early. I'm sitting on my position waiting for that cybersecurity buzz to really kick it into what I think is a higher gear. And just kind of an idea from recent IPOs, one of the things that paying attention to the IPOs does is it puts stocks on your radars that haven't really quite gotten on people. A lot of people don't even want to buy, or think about buying something until lockup periods expire. But there's some pretty good opportunities we had on that on that gene editing news from Intelia a couple weeks ago. One of the IPOs that had gone 2 days before that and was kind of not moving too much, all of a sudden went up about 20% over the next 2 days. So. And I think that one was called Graphite, and it went up and it came back down, but it was a good little swing play. And I'd keep an eye on Sentinel-1 if you think that cybersecurity is going to be strong. Anyway, let's look at last week's trades because I think it's got some good lessons for what's coming up this week. And that is when there's a cold market, you're not going to see a lot of really good opportunities, especially with IPOs. People want to sit them out. It's sort of like when the market seems pretty hot, the IPOs run off the debuts. And when the market's generally weaker, we see IPOs that debut below where we expect it to, which can be a good opportunity. But we just don't see the kind of hot opportunities that we'll see in a kind of uptrending market. So the theme of last week and might be the theme of this week is when in doubt, sit it out. I'm really looking for plays where I have a high degree of confidence to get in, take a big position, ride it for a couple points and get out. And if I don't see those opportunities, it's tempting, especially after you've taken a whole bunch of wins in a row, to miss anything. But last week we saw a whole lot of losers, and it was turned out to be a great week to be starting a vacation. But I still did play some of these, and by being selective, it ended up working in my favor. So the ones from last week that did pretty well were Inspira Technologies, which is, we talked about low float. They've got a really cool product that infuses the blood with oxygen. I think it's a good long-term hold, actually. So I'm buying the dip and selling some at these little peaks. But it opened at 5, and after a very short delayed drop here, it rebounded into a halt. You could easily have played this from $5 to $6, sold out, and within, I think that was a 10-minute halt or 5-minute halt. So you could have made pretty good money in about 20 minutes. If you wanted to hold, you would have been disappointed at the end of day 1, but you could reload, and day 2 brought another run up to 580. So you had a couple good opportunities to take money here with INN. The next one that did well was Centage Holdings, which was one that I said I liked because it was low float, and it had a lot of hype around its therapies for eye diseases. It opened at 30, ran up to 37, and with these low float runners that get some buzz, you just let them ride for the day. We've seen a couple of these in the last weeks that if you get antsy and you try to sell on this, first dip or keep, a trailing stop loss too tight, you end up cheating yourself out of a good opportunity. So if you have, some conviction in one of these plays and you're not expecting it to just halt, just let it run throughout the day and take your profits at peaks in sections and, take a nice little play. This kind of play that you look for when the rest of the market is kind of cold. Another good example, Stevanato Group. We said we liked the company. It priced its IPO at the bottom of the range and then debuted really low. And it's a solid company with good profits and good growth. So I was on an airplane when this happened, so I didn't get to play it. But it's the kind of play that I like because it doesn't leave much room for it to go down. You're pretty much expecting it to gap fill back up to the IPO price. You get in at 16.65, you ride it back up to say 18 or 19. You take a nice little trade there. But you're right, we have a huge list this week. We're gonna have to blow through these and really focus on the ones we like. I'll try to touch on them all, but there's quite a few, like the kind of random biotechs that have early stage cancer treatments that we're just not going to be too interested in. And that brings us to our first one. Low float's been key, but low float biotechs, unless it's 2 million shares, 3 million shares, just, they need something more of a story than just, immunotherapies for cancer or leukemia, even phase 2. This one's, I don't know enough about these, so I'm just going to say pass on a lot of these here. This next one is one of the more interesting ones for the week. Gambling.com. If you haven't heard of it, sure has a name that makes you think maybe you've heard of it. They do digital marketing and referrals for iGaming and sports betting. So this is kind of like, they own a lot of, I guess, search result pages, kind of good rankings for search terms. And they direct people to, 360 betting, DraftKings, those kinds of companies. They also have some services where you can see where the best spreads are for certain games. So you're betting, in the most favorable position for, the games that you want to bet on. And they are profitable with positive free cash flow. So you see revenue up 180% in the last 3 months. You see profits up 45%. You see positive cash flow. You see a float of just 7.5 million shares. That's all the ingredients that I'm looking for an IPO play. And this is one that for me would be, okay, now my attention is on this one, for maybe the 20th and the 21st to play it into a 2-day, get that media hype over the first day, let it run into the second day. And so when I see something like this, I'll tend to push anything aside that isn't really compelling to me, which helps simplify and focus on things. Maybe it's putting all your eggs in one basket, but it's not like I'm putting all my money in this. I'm just looking for the plays where I have a high conviction rate. If I don't see something better than that or equally compelling, I'm probably going to say, well, I've got gambling.com. This one looks really strong. Why would I play, something that's less compelling? This next one's going to be pretty interesting. It's Twin V Power Cats. And I say that because the float is just 2.8 million shares. They're a boat builder and they're profitable. But what's really going to be kind of the buzzword around this one is they're transitioning to electric boats. So they want to be all EV within the next couple of years. And that's just one of those trending terms where even with the recent sort of maybe distaste in some of the SPAC EVs, this one's getting social media buzz, it's getting interest, but there is a lot of confusion around it at the same time because it's currently traded on the OTC markets as TVPC. And I'll usually stay away from any kind of uplisting, except that they've put in a 6-month lockup period on this one. So that the people who own the TVPC shares, which, have already, they've already gone way up. It went from about 1 cent to 5 cents about a year ago. It popped up to about 58 cents in February once they announced that they were going to, uplist. And now that's kind of worn off and it's down to about 20 cents. So you don't want to, one idea would be, buy the OTC market right now. You're getting it for 20 cents. I think I haven't clarified what the reverse split is going to be, but I think it's something like values that are about $2 a share. Well, if this, debuts at $5 a share and your current stock is going to be worth $2 a share, that sounds great. You're making an instant $3, except that it's a 6-month lockup period and you really don't know what's going to happen in 6 months. The buzz, the initial pop off the low float play will have certainly disappeared by then. This is a little bit of a wild card. It'd be interesting to see what it does. I don't have enough high conviction to go big on it, but if I do have a little time in my schedule to play this, I might expect 1 or 2 halts out of the gate if a lot of people start keying in on it. But it is one of the more interesting ones that is on the table this week. And then we get into a bunch that are sort of like not all that interesting from a retail point of view. They might be good business models. This is an online TSCO online legal platform for law firms, helps with administration of legal matters. LegalZoom, which is a really strong company, didn't have a huge run, really has traded sideways since its IPO. So I don't know if law services are all that sexy to the market. They do have strong revenue growth. They're close to break even. They have a high retention rate, but for me, this is just not enough of there's not enough retail interest, in my opinion, to make this one worth worth playing. Kaltura, we talked about this one a few months ago. They had a failed IPO earlier this year. They do video communications for businesses. It's like virtual conferences, this kind of thing. They do have accelerating growth. They estimate that their value, their acquisition cost is, about 10% of the value of the customer, which is pretty impressive. But I don't know if people want, Zoom for business, and people say, well, isn't Zoom for business? So this one's a little confusing to me, and I don't think it'll be, it's not something I want to risk my time or money on right now. Paycor, it's SaaS for human capital management. It's like payroll, benefits, employee engagement, HR tasks, pretty slow growth and a lot of competition. So this one just doesn't, pop out to me as, hey, you got to get on Paycor. No, this one I'm gonna pass. Elysia Therapeutics, cancer development. I don't know. Next. Absci, this one's synthetic biology for drug discovery, which sounds really cool. And a little while ago, maybe this would have been very interesting. But we have seen sort of mixed results out of the other synthetic biotechs, Zymergen and I forget the name, but the ticker was DNAY. These have both sort of traded sideways and down, even though ZY ended up being kind of a Kathy Wood. She stocked up on some of it, giving it a little bit of an initial run. But again, are there other plays that I'd rather be in? Yes. Is this something that just screams at me, yeah, everyone's going to want Absci? No. So I'm going to keep looking for something else. Instructure Holdings, this is kind of interesting. This is a virtual instruction platform for K through 12 schools and universities that's used in over 90 countries. So this has really captured the pandemic, of course, gave this a big boost. I'm a little surprised that revenue grew only 31% in 2020, except this is the kind of thing that takes a little while for schools to adopt. And in at least the first year of COVID, now we're having to think about whether this is really just going to go away. Schools just shut down and they use Zoom and they kind of scrambled. If we stay in a lockdown, which, we're in Greece, Mykonos got shut down completely. Literally the day we arrived. No bars, home by 1 a.m. This Delta variant is starting to look like something that's not just going to be, swept under the rug. And if we end up having to go back into lockdowns, and if the whole world, America's doing pretty well compared to a lot of other countries in terms of rolling out vaccines, you're going to need these kinds of services. As kids still need to get educated, people still need to go to school. Universities are looking more and more globally to fill out their student bases, and with just 12.5 million shares. So my camera just shut off the battery. I don't think you guys need to see me anyway. Sorry about that. Just taking a lot of pictures, and now we are fly in the dark.
Matt, what you can do is you can just hit stop cam and StreamYard on the wiki.
Stop cam.
Yeah,
there we go.
There we go.
All right. Yeah, you can lip sync. I'll be Spencer.
Great.
Okay. So this one to me is interesting. It is 2 days after the gambling.com. So by then, if I was sitting there trading these normally, I'd be looking for the next play. This could be interesting. I would definitely watch it and see if the indication price indicates demand, but not something ridiculous. I would like to be in on this one. Okay, next slide is over here. Okay, now Zevia, and they put Zevia and Zenvia on the same day, which is a little confusing. I wish they wouldn't do that. But Zevia is an organic beverage provider. They've been selling pretty well during the pandemic. It's kind of healthy sodas as a way to think of it. I'm not in the States, so I don't know exactly how popular this is. Spencer, have you heard of this?
I haven't. Is the product called Zevia, or is that just the name of the brand?
No, they do have some products.
Has anyone in chat ever heard of Zevia? Anyone around here ever heard of it? I've never heard of it. No.
Yeah, so that's not a hugely, that's not a hugely positive indicator when it's not well known and it's not like a household name. It's not like Oatly, where Oatly was clearly something that everybody heard of. Everybody gets it at Starbucks. So maybe not, but it's just, again, I'm being very selective in this market. If we're in a hot market, maybe, yeah, play this. If we're in a cold market, then, okay, so people are saying, yeah, it's great. It's the luxury brand of LaCroix, great drink. I use it. Okay, so that might be, this is the kind of thing where, trade your own trade, come up with your own ideas. We're not giving you financial advice. We're telling you guys what IPOs are coming up. And, if this is popular and has retail following, that might drive, especially a day two play. So we've seen a lot of these that have retail or brand name recognition run on the second day because the media covers how the IPO did, and people realize it IPO'd, and they say, "Oh yeah, no, I love that stuff. It's great. I can't even find it on the supermarket shelves. I'm gonna go pick some shares up." So if you do play the IPO and it doesn't run on the first day, don't give up on the first day on something like this. Hold it overnight. See what it does on day two. You're often given a chance to take, optimize profits, or at least get out without losing money. So for something like Zevia, that's, how I would play it if I was playing it. I probably won't, simply because I'll be on a beach somewhere. The next one is Ryan Specialty Group. This just sounds like one of these. They do specialty products for insurance brokers, agents, and carriers. It's 56 million shares, almost 57 million shares. That's a huge float. And this is really something more for, safe money institutions, pensions. I don't expect it to trade, up or down one way or the other. These usually go kind of sideways and flat. Not worth trying to scalp 50 cents or $1. I'm looking for plays where I can take bigger gains than that. And this one just doesn't stand out as something that most retail investors would be too excited about. Okay, Couchbase is interesting because it will get comparisons to MongoDB, which has done phenomenally well over the last few years. It's a database management system. They do have rapid growth and they have a good retention rate, but they are unprofitable, and people in tech kind of have their favorites. And the comparisons to MongoDB are that MongoDB is generally better and preferred. So with a float of 7 million shares, it is interesting. I don't know if enough retail investors understand Couchbase for it to be, it's not really a brand name. I have to be a little careful because I know what it is because I'm a software developer. But given the market, if it's a cold market, unprofitable stocks, just IPOs haven't done that well. So I would, at first I was excited about this. Now I'm on the fence. I'll probably, by the time it goes live, not be interested in it. So interesting one, but no thanks. Zenvia, not to be confused with Zevia, is a Brazilian customer experience platform. We talked about them a few months ago as well. They scaled back their IPO. I generally just don't play the foreign tech companies because I don't know them. I don't understand them. And that goes for other retail investors. They haven't done particularly well out the gate. Some of them have kind of stabilized a little bit and then run up, but I just don't know enough about this to want to play it. So for me, it's a no. VTEX is a little bit similar, although it's more in the vein of online e-commerce. So with growing revenue, growing gross profit, but kind of on I guess they're flip-flopping a little bit with operating losses because they were operating positive prior to Q1 of 2021. Now they're an operating loss. The valuation is really high, and I think, again, American retail investors don't know what this is, and I'm not trying to play everything right now. If the market starts getting hot by the end of the week, maybe you play this one. Otherwise, I don't know, probably not. Core and Main, industrial distribution. I couldn't even, this is some kind of, they do fire, water, sewage. It's kind of boring infrastructure stuff. Maybe they do well. They get some money out of infrastructure bills. It's a very big float. Again, I think this is kind of like a pensions and investment banking. Big institutions will buy this to have stability in their portfolio. I don't expect it to run one way or another, so it's not something I would play as an IPO scalp. Outbrain, this one, I think all of us know what Outbrain is. Or you've seen those ads. It's after you've read an article on the internet. Down at the bottom, there's kind of like that link bait stuff. which are those sensational headlines that make you click deeper and deeper, and you can spend hours getting kind of lost in an outbrain hole. So I think they do pretty well. This is towards the end of the slideshow. I haven't had time to dig a little deeper, and it's at the end of the week. So I'm going to send out more updates in the newsletter. If you go to ipowarriors.com, sign up for the newsletter. At the end of the day today or tomorrow morning, I'm going to send out some analysis that's a little deeper on this. I do like this, though, because most people know what Outbrain is. It's 8 million shares. It's digital advertising that's not really based on cookies. It's based on relational content. And this one has the kind of ingredients. I want to look a little bit more deeply into their revenue and profit growth. But this is a company that is, has brand recognition. It's in a stable area of the internet. They've established themselves. They're on tons of websites. And when I have that kind of familiarity, I know other people do, and I'm interested in this one. I'm going to dig further. Candle Therapeutics, biotech, engineered viruses to fight cancer cells. Okay, interesting. I don't know anything about it. 6 million shares, whatever. I can't play all these. I actually just generally have a rule not to play biotechs unless something just really stands out. So when in doubt, sit it out. Sorry, Candle, not interested. Exponential Fitness reminds me, they operate as about 9 different chains of boutique fitness centers. Marky Mark's fitness IPO last week didn't do very well at 45. So Mark Wahlberg. And I don't expect this to be a very hyped or exciting play for enough people to make this worth playing. And, until the market turns around, I'm going to be very selective. This one doesn't stand out. And the ones that do stand out are kind of obvious enough to give me enough to chew on. I like gambling.com. I like the Instructure Holdings. And after that, I think that this is a week to kind of maybe keep an eye on Twin V Power Cats. If this one drops hard on the debut, that rebound play has done really well. We saw it was Wave 2 weeks ago. That Israeli, they used the ocean to generate power. It dropped from, it was an uplisting as well. It dropped from 16 to 10 and sat there overnight. The next day it ran up to like 30, 35. It did a low, it was 800,000 shares. So it did a low float kind of squeeze. And this has 2.8 million shares. So if we do see an initial drop, it might be a good time to take a swing there. But yeah.
All right. Matt Hammond joins us every Monday. He's from IPOwarriors.com. The link is up on the screen. Matt, we appreciate it. We'll talk to you next week, and hopefully we have some good trades this week.
Thanks, Spencer.
All right. Thanks.
Good luck in the market.
All right. All right, that's a wrap for me today for pre-market prep at least. Please, guys, smash that like. Let's get to 400 likes. Get to 400 likes by the time I hop off here. Someone asked about David Green. David Green is live right now. I'm going to end the stream, redirect to David's show. He'll be live trading on our stream here until about 11 o'clock Eastern time. We got SPAC's Attack. They got a great guest today. SPAC Insider will be on the show. We got the Power Hour. Today on the Power Hour, we have a very special guest. We are joined by the former CEO of Pepsi and Apple. If you know who I'm talking about, John Scully is his name, and very excited for that interview as well. So great slate of shows today. David Green, SPACs, Power Hour, Get Technical, Moon or Bust, guys. I'm sorry, no Get Technical today because Moon or Bust is going for 2 hours because we got a big one, and I'm not going to spoil it, but let's just say we have a billionaire on Moon or Bust today. So there's the opening bell. I'm done. Smash the like. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. And I'm done. Everyone have a good rest of your day. We'll see you later.